And welcome to the OANDA Market Pulse charting analysis video. My name is Craig Erlam, Senior Market Analyst at OANDA. Now, as you can probably tell, my voice is not great today. I've got a bit of a cold which is affecting my speech, so hopefully you still understand me and we can still gain a lot from this video. The first chart we're going to look at today is dollar yen. Now, as you can see, we've had another day of heavy selling today. This came following the consolidation yesterday, the spinning top which it ended up as, and then we saw a rally today. And as I highlighted previously, we did see this very bearish candle, and it was around the midpoint of this candle and the previous level of support that the pair ran into resistance today, following a brief correction. And now we are seeing more downside moves, and we found support around 120.50, which is a level I've highlighted previously for being a prior area of resistance and support on a few occasions. It's also one of those numbers which I said tend to get quite a lot of traction in yen pairs, in particular the 50s and the zeros always seem to provide some form of support and resistance along the way. If we see this broken going forward, I think 120 is going to be very key. It's a round number, key psychological level, prior level of support and resistance on occasions, of course not through this period. It's also got a speculative ascending trend line here from the lows on the 24th of August as well, which coincides with this level here. So I think this level is going to be key. If we see this broken, then I think we could realistically see a move back down to 118.50 is going to be the next major level of support for me for this pair, and then beyond around 118, and then even potentially moving back to 116, but potentially getting a bit of ahead of ourselves at this stage. I think this 120 level is going to be very key for dollar yen. Next is euro sterling, and in this pair we are continuing to see consolidation. Now we are seeing higher highs being made, but as you'll see also with euro dollar in a minute, this isn't really a very aggressive move, given how aggressive the move was following the ECB. Following the ECB last week, we are just seeing this this rising channel, which can sometimes be a bit of a bearish signal, especially when we're seeing the prior high on the 8th being made on lower momentum. So this is a bearish divergence pattern. If we see this the bottom of this rising channel broken, that would suggest to me that the pair's looking much more bearish, and we could be looking at a move initially back towards these previous lows around 71.65, but potentially then going a little further back, we could see a broader correction to the downside. I wouldn't expect to see the pair move back to here anytime soon, purely because the ECB is clearly far less dovish than we anticipated, but we could see a broader correction potentially back around maybe back towards 71 or so in the medium term. But again, the key here is going to be whether we see a break of that ascending channel. Next is cable, and what I want to just highlight here is similar to dollar yen. We had this very bullish Marubozu candle. The pair did correct as we anticipated, coming back to around the midpoint of the Marubozu candle, otherwise known as the Marubozu line, which provided support around 151. And since then we have seen it continue to drag higher. Now, as I highlighted in the previous video, the key level for me here is going to be this prior high, because while we are seeing this in a recent uptrend, the broader trend is definitely lower. We are seeing lower highs and lower lows being made, and this break of 153.30 would be the first time we've seen a higher high being made, which could suggest that the pair is breaking out of this broader downtrend. But again, that'll be interesting to see probably next week. In euro dollar, I wanted to highlight this rising wedge that we have, or apparent rising wedge. Of course, we do only have 2 touches on the upside and 2 touches on the downside, so these are both speculative trend lines. But this is looking like a rising wedge to me, and given that we got this previous high on lower momentum, again similar to what we had in euro sterling, this could be potentially a bearish setup, but a rising wedge would coincide with that. A rising wedge, whether in an uptrend or a downtrend, is a bearish setup. So if we see this, the support of the rising wedge broken, and in the coming days, then that could suggest that, given the size of the opening of the rising wedge, which is around 200 pips, we could potentially see a move back towards these 108 levels, which I think are going to be very key here for euro dollar. The other thing I wanted to highlight again is the fact that this 110, 111 is a very key area of resistance, and if we see that 111 in particular broken, I think we could potentially signal a move back towards these 115 levels. Finally, WTI, because we are continuing to see this grind lower today. And while the move of the last few days hasn't been overly aggressive, I did want to highlight, given the fact that we are now pretty much at the end of the week, that the weekly candle is very bearish. This is Marubozu candle. It opened near its highs and it's closing near its lows. That's a very bearish candle. Now, what you can sometimes see following this is a move back towards the midpoint, the Marubozu line, when we see some profit, because these can experience some profit taking after such a bearish week. But the Marubozu line would then be key, which would coincide with these previous lows, because this is where, if the trend is in fact still bearish, you may see some more selling interest quite often from the markets. And again, I still stand by the fact that 32.30 to 33. 33.50 is the next big level of support. Below here, we've got 32. As well. One more thing I wanted to highlight is we did have a question on the last video asking why the Fed rate hike could be bearish for the dollar. So I just wanted to highlight that the reason why this is because a Fed rate hike is effectively priced into the markets now. And what you can quite often see with the markets is you see this kind of buying the rumor, selling the fact mentality. So once the Fed actually does raise rates, then it will pretty much be totally priced in, at which point, for one, we could therefore see a correction off the back of that. But also, I think when we do see a rate hike, I think the rhetoric from the Fed, from Fed Chair Janet Yellen, is going to be very dovish. She'll want to drive home the fact that the pace of rate hikes will continue to be slow, effectively reassuring the markets that they're not going to choke off the recovery. So I hope that answers your question. And any more questions, please do just leave messages below. I do look at them and I'll address them in future videos. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.